Recording in progress.
Okay, hello everybody. Thanks for the waiting here. We had a few extra steps here to live stream, and so we're live streaming on YouTube now. And so anyway, let's dive into it. How's everyone doing? I've got to just say hi to everybody. I'll move this window down here. And got a full house here. So hey everybody, thanks for being here. And well, big day in the markets. So we're going to unpack this. We're going to look at some news. And if you're wondering what's going on here with Bitcoin, I'm going to show you and give you my best thoughts on this and where we go. I do think we have a dip, and this will be the dip we kind of been waiting for, so I wouldn't worry too much. That's the TLDR on that. And so let me open up the chat here, you guys. I'm gonna, if you can save your questions here. I've got these messages here. If you could save your questions sort of till the end, but let me just detach the chat window. Okay, good. I've got all of that right in front of me. All right, you guys. So let's dive in. Again, this is Brett from Moonstream, and this is our crypto mastery class. We're going to look at some news and what's going on. Look at some of what our indicators are showing us, and also kind of look at the charts, overall market, etc. So with that out of the way, let's see. Actually, though, I am, let's see, on the other screen, though, Myrene, can you make sure I'm logged into this? Because it's not showing anything on the side one that we normally record from. So can you guys see me? Because I'm logged in as an attendee, and it's not showing anything. Oh, there we go. Okay, sorry guys, we're sorting this out. A lot of tech stuff going on here, and that's why I see. So we're going to do that and do that. Okay, cool, we're good. All right, everyone. Well, look, outflows on the IBIT here. So we'll just take a high level at this. Also pull up a chart. Of course, we can see the markets are universally down. Interesting, though, Litecoin up. If we turn off all the negatives, it's always a good idea to see what's strong. And when the markets are down, Litecoin, let's just take a quick look at that. I also saw BitGet was up. These brokers are going to be the ones that benefit from up or down scenarios, and so we'll come back and look at Litecoin here in a minute. I want to get back to the heat map. So we've got Litecoin up, and we've got BitGet up 5%. Does not mean run out and buy anything, you guys. It means keep an eye on what's strong when everything is weak. Sort of like the old Sun Tzu, appear strong when you're weak, appear weak when you're strong, something like that. Okay, so but let's not keep our head in the sand. I know it's a tendency to always look like markets are going up. It's that old analogy: if you're a carpenter and all you have is a hammer, everything looks like a nail. Is that right? So we've got everything else pretty much down big. Dogecoin, we don't follow that. Bitcoin down 6%. It was down 7%. And I've been doing a lot of looking around the internet this morning. And so that there's a comment coming in, Perry. I'll answer that in a second. But basically, so we have an idea what's going on. Perry says, please remember to keep the watch list open on charts so they are overlay avatar head. Yeah, so thank you, Perry, for that. What I'll do is I may hide my video or move over. So on one of these screens here, I can move over to the right side or the left corner for you guys. So what I might do, I'll keep that in mind, and I'll move it over as we go. Okay? So cool. Let's dive into this. So Bitcoin is down a bit. What I want to call your attention to is, first of all, don't panic. We are coming down. We are nowhere near the 50-day moving average. And so while here's a TLDR, there's a lot of liquidations that were taken out right here on the long side. And so our order block detector here is good, but it's not a real-time heat map. And one of our members in M3 Active Trader, and if you're watching this on YouTube, this is a service we do where we meet every Wednesday and have a chat group. So you guys, we have a nice community in there. I'll tell you how you can find out more about that in a minute. But I'm going to pull that up here because essentially it shows there were $4 million in liquidations in an hour. And we'll look at the 24-hour on that. Let me just pull that up here. And where was that? We've got a lot. We've been chatting all morning. So, guys, if you're kind of like this class, we do dive into that a bit deeper here on the M3 Active Trader class. So here's a shot at that. One of our members posted this. So, and this is one of those sites that I had shared a couple weeks ago. So we have ETH. Let's see, liquidations on the green side now. Isn't that interesting? So if we look at total liquidations here, and I will move my camera over so you can see this a bit better. So let me just kind of stick this. I'll move it here for now. How's that, you guys? And so down in the right-hand corner, we can see that on the 1 hour wrecked, it's about, we have longs and shorts. Longs are getting wrecked. 24 hours here, He did start out with the 1 hour this morning, and what's showing here is also the 1 hour. But earlier today, it was mostly on the longs. The longs were getting liquidated. So all I really want to see, though, look at the 12 hour, 163 million on the long side. So what that means is there was a lot of leveraged longs in the market, and they dropped price to take out that leverage. And so if this is new to you, the whales that want to buy Bitcoin cheaper, and the whales will just leave that as an open-ended institutions, big, big pockets, whoever they are, they want to buy back cheaper. There's a lot of buy orders down in this range. That's also called liquidity. So to drive the prices down and create liquidity by liquidating traders that were buying on margin, that's the name of the game. So they did that, triggered some liquidations, some stop losses. Fortunately, it's not a capitulation event. And you can see all of the strong buy pressure here on our order block detector that I'll talk a little bit about in a minute. It's for one of our M3 actions indicators, rather. So look, guys, I think it'd be great if we came down to 63K. I would prefer not to lose the 50-day EMA. Let me make sure I'm not covering anything important here. So this green line, the 50-day EMA, we will look at a weekly as well, and then we'll dive into some news. Bearish engulfing candle on the weekly, a little concerning, but again, I think it probably is more likely we drift down and consolidate in this green zone. We might have another liquidation cascading event down in the 60K region to liquidate more of the longs that might be coming in here. So we might see that happen here. And certainly there are, we saw $1 billion. I'll just remind you guys, we saw $1 billion in liquidations all the way back in this area when they pushed it higher on March 4th and liquidated a whole bunch of the shorts, and then they flipped it around when everyone went long and they dropped it. So these are the games that happen at these key inflection points. Part of this push higher was undoubtedly a short squeeze and these market maker games around the old highs. So that's no surprise. And we'll look at the total market cap just to kind of see that, because the high of the market in the last cycle was exactly $3 trillion on the total market cap. And then the programmatic selling kicked in and just took everything down. So as much as Bitcoin is the leader, we also want to keep in mind that the bigger institutions and the bigger holders, they largely rely on programmatic buying and selling. So certainly you want to be careful at the $3 trillion total market cap when we get there, and also when we get down to we get up to the 4 trillion market cap. So what I'm looking for here is, got another set of charts. We're going to get into the news here. Just wanted to give you the TLDR on that. So why don't we come back to this, just check the news really quickly, see if anything new has hit the wire. Basically, ETFs traded staggering $111 billion in March. So we have that on my next tab. I'll show that and where we are with this. So Bitcoin traders spread buy the dip. Be careful with buying the dip prematurely, though. And so we're going to look at that specifically here. But on the outflows, we can see on the Blockworks ETF tracker, and there are more real-time versions of this that I'll pull up here, but essentially BlackRock and Fidelity on the total assets under management. So it dipped a little bit. We had pushed up to just over 10 billion on Fidelity, right around 27 billion. What's still significant, though, is that between those two, there's more assets under management than Grayscale, forgive me, which continues to fall. And so, look, we'll just keep an eye on this and maybe pull up the other version of this at Hey Apollo, Bitcoin ETF. This is a good one to visually see what's happening there, and a similar chart in this region. But also if we scroll down on the visual here, we see this is BlackRock, and then they have Fidelity coded as green. I don't know why, but see that we see Fidelity inflows sort of stabilizing. BlackRock continues to push up while the blue lines are GBTC. And it sort of seems like we're finding a little bit of equilibrium here, at least for the time being, until the next round of inflows and outflows happens. And I think that'll be closer toward the halving. So here I am covering the important information again. So I'm going to move myself right to the middle here for a bit. So again, Bitcoin on and Ethereum, we're seeing liquidations there. No surprise if we look at the 24-hour rect, however, predominantly the longs. Okay, so we have 362 million liquidated there. We can visualize it on this tab. So it's a little different data, though, isn't it? So on a 24-hour, Liquidations 155. I don't know. This doesn't, I guess one of these updates faster than the other. At any rate, doesn't really matter. You guys can see what's happening there. And so with that in mind, let's do this. I am going to jump over and we'll look at, we've already covered that. Let's get to the news and then we'll come back to this. But in the short term, you're getting a little bit of a bounce and bottoming there. I do think we drift down here in the coming days, at least down to the 63K level. The deepest buying is right around 60K down here. So it would be, this is not financial advice, but might be prudent to basically do that, to have limit buy orders down in these different levels. And we talked about that last week. 65K even and 60K would be prudent areas for buy the dip. And certainly our indicators are going to give us better signals as we go. But as our TSI, though, is turning bearish. So I want to turn on the ERI here just to see. So fortunately, and this is important, everybody, fortunately, we have not seen a bearish weekly ERI. We did have the ERI back here, and we'll look at our new RSI indicator to see if there's bearish divergence there, which was one of our new ProPack indicators. And by the way, if you're new here and you want to find out more about these indicators, you can go to cryptomastery.org and find out more about those, cryptomastery.org, and also moonstream.io. And we'll let you know more about these. Some of these I'll be sharing don't have a website yet. We just released a new ProPack indicator suite. So let's see, get back to there. Okay, good. So basically what we're looking for is, further downside. TSI coming down. We had the ERI down here to finish that thought, though. The weekly time frame, I do not like this big bearish engulfing candle on the weekly. And I want you to hear what I'm saying is our signals correctly called the market cycle top last cycle. And I'm a little bit, I want to see this stabilize, because even though we're just in Tuesday, if we see this on by Sunday, I'm going to advise getting out of the market. It's not what anybody wants to hear, but these are the signals that we've seen over and over again. A bearish engulfing candle on the weekly, our early reversal indicator. This has a lot to do with momentum and velocity, and I'll show you the inside of that briefly because we cover it every week. But these three signals are the signals that, just let me turn some of these off so you're not confused, that we look for, and which have signaled correctly the market cycle tops in the past. And so this is really what I am looking for. I'm not going to second guess this. We have this ERI and a bearish engulfing candle there. And then we had this down here, the trend strength indicator. And these are proprietary indicators that we have. Unfortunately, can't put a circle on that because it's down below. So anyway, we'll be watching for that. I don't think that we'll have that, but we have to remain impartial, everybody, because if we do see that here and we do start to get, this is why you need to have these, and you can find out again more at cryptomastery.org. These two, the early reversal indicator and the trend strength indicator, have called every major sort of cycle top and bottom in the past, and also got us into the market in January of last year on that monthly time frame. So I can't emphasize enough having these in your arsenal, but I'll keep you posted. All right, so far it looks okay. The criteria on these, and if you'd like to, well, I don't want to go too far in the weeds with the ERI, what it means, but the pattern, there's a certain pattern that has to happen within 3 time periods. So that would give us this indication here. And so it's looking a little bit like back the last market cycle top. And I really want to be always aware of our own confirmation bias. So this time probably is different. It's kind of a triple top. But if we drew this a little bit differently, but look, I think probably we need to consolidate, come back down to 60K, maybe even 55K. That would be another area to have limit buy orders, and then we push higher. So I should share a good visual there in the M3 chat earlier today. Let me move that over. And so we're very active in here in the mornings. So basically, yeah, this is the Oops, here, let me move this over and I'll show you that. So basically, this is what I think happens. We pull back here into this zone around 60,000, 65,000. We curve up higher, going in closer to the halving. But it's also worth noting that the halving itself is not a trigger for going higher in these markets, right? So it's the breakout above the phase 2 box, which we're seeing happen a little earlier. I was watching the CEO of the let's see. Sorry, guys. It's on the tip of my tongue, but it's a big fund that is it Galaxy Digital? I think it was. It doesn't really matter, but he was suggesting, and as Bob Lucas says, that it's looking at it like a left translated cycle, but also essentially, seeing that push higher going into the halving because of the ETFs. And so it's been accelerated for those reasons. No surprise there. And, we just need to watch this 70K level, this 75K level. Once we break above 75K, though, we're off to the races. It's just a matter of, can this thing push higher from here? Is there more money coming in? Do we dip? I think it's reasonable to assume we come down, maybe down even to 53K. I don't think we'd come down any lower. Somebody was suggesting earlier today that we had a CME gap that had to fill. Now, these classes, we normally don't go into this much detail. Usually in our crypto mastery classes tomorrow, our Moonstream M3 crypto classes that you can find out more about at moonstream.io/M3. Not here to, most of you are already in M3. This is our Tuesday class where we talk about the indicators and the news. But if you'd like what you're seeing so far, please, first of all, go ahead and subscribe to the channel. That would be great to help us to get this out, get the word out, because we do have an edge and we do have some indicators that are really helping us win in these markets. So you can learn more about that again at moonstream.io/M3. And I'll just do a short little scroll through here. You can see that I am actually a trader. These are got about 7 screens here I'm looking at right now. Most of you don't care, so let's dive back into it and just say that this is a interesting holding pattern, you guys. I think if you're panicked by the sell-off, the best thing to do is wait and see. There is a very bullish pattern that could be playing out here, another bull flag. And if that were the case, this puts us right up to where my bull targets have been based on other studies that I have published on TradingView. But if you're kind of familiar with bull flags here, this, if we come down into this $60,000 range and break out, that to me says we're in a macro bull flag. And so let's take a look at what that could look like here. So some people draw this a little differently. This is how I draw it. That could put us up here right around 110,000, and I think that certainly in the cards. I think we go much higher. So just to hop over to that study here, even though we have a bearish TSI, to indicate we pull back down, what we really want to wait and watch for are the bullish when we turn from red to green on our trend strength indicator and the early reversal indicator. Those are our two number one signals, as you guys know. But this is the price action that I do believe will happen to some degree. It's pulling back. The blue line is an overlay of the last cycle, so we're seeing this kind of a dip right in here. They're not going to overlay exactly, so some of this is pointless to try to make it fit exactly, but we did see that pullback roughly around the same time last cycle. And but at any rate, once we break above this old high around 73K, call it 75K, then it really takes off. So a pullback before that certainly warranted. I did suggest that last week. It would come down again, kind of go sideways, and then we break out. So according to this and the halving cycle, this still lays out almost perfectly that we bounce and break above this key level here going into April, even as soon as next week. This is a daily chart. But so I would keep that in mind. Have some powder dry if you can. And if you don't panic. We're in for the long haul. And any pullbacks here, as you can see I have on the chart, would be excellent times to add to positions, especially on Bitcoin and alts. Pardon me. So anyway, this is published on TradingView. If you want to go find that, you can Google me at Brett Fogle on TradingView. And so we've got two studies here, path to 155K Bitcoin, even this one here, which shows 210, even 250 possible. this cycle. I was watching somebody this morning who said that he thought we'd go to 500K this cycle. I don't think so. I think that's a good example of the truth is in the middle, and half somewhere around 250. Guys, I will be taking profits and selling at 100K. I think do we push straight through 100K and up to 155? We did last cycle. I don't know. There's another scenario where I see us rejecting at 100K and coming down and retesting the old high. We'll just have to see. There's scenarios A and B, but certainly go check out that study. I won't have time to look at today. We unpack it every Wednesday on the M3 Active Trader class, though, the 10 factors that can drive us to 155K and 210K. So go check that out, or go ahead and get signed up for the M3 Active Trader, because it includes our winning indicators that I'm going to share some new ones with you today. So essentially, many of you have seen this, the push to 155K. This is the fib 2.618. And I think that's certainly reasonable. We could push up to 155K and then see a bit of a pullback there. Keep in mind, there typically are 30% pullbacks. I'm just looking for something here. There's 30% pullbacks on these bull markets, and so sometimes even more. So this kind of a pullback here, 32%, certainly is likely. This was the last cycle, so I want to remind you guys that to be aware and to take profits at key levels, not sell everything, but take some profits off the table at these round numbers. 100K, 150K is the prudent thing to do, all the way up here to 212K, which was my previous projection for the market cycle high, based on the Fibonacci's that forecasted the last market cycle high. And I won't go too far into that. That's usually what we unpack in the Wednesday class, as well as look at total market cap and the DXY, and we go a little deeper. So anyway, I do want to hop over to the news. We'll come back to this, but in case you're in a hurry and wanted to just get my input on this, I do think that these numbers are reasonable for the next market cycle peak, 255K on a final push next year. But I think this year the highest we'll see is 210, 212. But as we know, new information equals new decision. And let's see. Yeah, thank you. Perry has published the link right in there if you'd like to check that out. And maybe somebody could drop it on the YouTube live stream. This I published, I guess it was March 25th. I cannot edit this. We'll see if I'm right. And all you have to do is hit this play button and see if it plays out or not. We'll see. I will continue to update you as we go. So with that in mind, let me do this. Let's hop over to some news. Then we'll come back to some charts. And let's just unpack some of this here. And let's see. So Ethereum could face hidden risks from ballooning restaking market. This is, look, I had talked about this almost a year ago, that the possibility that the SEC would come back in, basically saying that, let's see, I'll move myself, come over here, a little bit over there. How about that? So basically, if the SEC came back and said that, hey, look, we said, you guys at Ethereum, we said that you and Bitcoin were both not considered securities because it's proof of work and decentralized. Well, then Ethereum changed to proof of stake, right? So I was suggesting that that could change how the SEC views them. And so we're going to get to another article here, and in another tab I have open, that suggests that that's still a problem. Larry Fink came out the other day and said, well, hey, look, I'm not worried about that, because essentially I'm Larry Fink and I'll do what I want. We'll get to that. But so Ethereum potentially facing new hidden risks. Let's see, ballooning restaking market. We have to remember we're still in the Wild West, everybody, and these things it's uncharted waters. So just keep that in mind. Just imagine we're all on a pirate ship and we're heading out to sea, and we don't know what headwinds we have, and what other pirates are going to try and steal our treasure. So I don't know, you guys. So restaking has grown into the second largest DeFi sector on Ethereum blockchain, has likely become core part of the infrastructure. Interesting. To become a core part of it. Eigenlayer is the second largest default protocol. This is a bit more advanced than we want to get into right now. So let me skim this, and I want to get to more about the ETF. So the Spot ETH ETF application, what happens if Ether is deemed a security? As I was just saying. And in all fairness, Bob Lucas, Loukas, on Twitter was one of the first to suggest this left translated cycle. And but actually, This was an original thought on. I was going to say maybe I read it from him, but I remember the day I was wondering in class. I talked about it. I said now that ETH is proof of stake, maybe they lose that coveted not a security designation. Now, the CFTC has just come in and basically said that it's commodity. So there's that battle between this SEC and CFTC. Ultimately, we may see a new regulatory body because those two can't agree. And therefore, we don't know what's going to happen there. I think we still go up higher and they work it out. But expect some volatility along the way because, as we know, the news can move these markets and often does. Let's see. I don't want to get into eigenlayer and restaking. We can talk about that in tomorrow's M3 class. That's a little bit deeper than I wanted to go. And most of you are not staking, I would imagine. If you're on the live stream in Zoom, just put in the chat if you guys are staking and if you know what that is. Probably you know what that is. Essentially, staking is providing liquidity where you're putting your coins on the network so that the exchanges can use it to trade the coins. And let's see, I'll just let somebody in here. And so that's all I wanted to say about this. Let's see, Coinbase said, despite the risks, restaking champions the open innovation with Ethereum and will become a core part of the ecosystem's infrastructure. So, that's worth noting. A lot of the news, I sort of try to get an overall picture. What does the frame look like around the information? And that way we can process that a little bit better. Okay, so let's see. Bitcoin traders spread buy the dip. Yeah, that's, it's a bit dangerous to just always say buy the dip. One of the things we look at here certainly are the areas, the higher probability areas to buy the dip. And so let me just pull up Bitcoin again. Wow, down 4,000 here. Let's see. Michael Saylor Michael Saylor is going to say buy the dip. Let's see. Wallet containing 2 billion DOG seized Bitcoin. Oh, okay. Well, this could certainly spook the market here, guys. Again, I'm doing my best to show you what I'm seeing, and we're building a thesis here. So there's two sides of this. Wallet containing $2 billion of DOJ seized Bitcoin, probably Silk Road and other nefarious actors. But before I read any further, that will be sold over the counter and should not affect exchange prices other than to spook everybody. And 2 billion's a lot, but there's a lot more coming in on the ETFs. So here's what I will say. Take everything with a grain of salt and always ask why now? Why is this information coming out now? And remember, 80% of media is placed. So while it's easy to say don't be paranoid, follow the money. And so, if powers that be would like to buy Bitcoin back cheaper, they'll certainly spread more news, encourage more news. This came out on the block, which is reputable, but news articles are pushed out by press releases. There's somebody behind the press release sending these things out saying, hey, let's send this out to the news wires and let's make it scary because we want to scare the markets and buy more Bitcoin lower. The truth is usually somewhere in the middle, so just keep that in mind. We don't want to panic too much. In fact, I'd always have a contrarian idea. Well, why is this happening now? And so anyway, so this basically suggests, Arkham data is solid, but does this mean they're going to dump the price on the open market? The government would sell over the counter. And that is done outside the exchanges. Think of it in the old days with stocks, you would have certificates and it's sort of like bearer bonds. And if you wanted to sell your stock to your neighbor for $1, you could do that. It wouldn't affect the price on the exchanges until later we have these efficient exchanges, Wall Street and derivatives and all these other ways that the professionals manipulate the price. And so, but anyway, so some of that I think you want to keep in mind. 2 billion, however, is quite a lot. So let's just see, 2 billion of Bitcoin and has a test transaction to Coinbase Prime. Let's see, 30,000 Bitcoin. Ark can belong to Coinbase Prime, block one information, multiple confirmations. Let's see, the rest of the funds were sent to a change address, means they may have effectively stayed in the same place. If it's a test transaction, further movements could be on the way. Certainly worth noting, everybody. I mean, look, we have to acknowledge, although I don't think so, And yeah, here, as I said, the 2 billion tied to the funds DOJ pulled from Silk Road. So we've known about this for some time. I've talked it over with my partner, and this is a don't worry too much because it'll go in the O2C market. But what I was about to say with that, let's see, where was I going with that? Effectively stayed in the same place. Okay, so there's a non-zero chance, which would be terrible. But if the governments sold all their Bitcoin and then declared Bitcoin illegal and launched their CBDC, the next week, it would decimate everything. Are they going to do that? I can't see that happening, everybody. And the SEC, especially with all the ETFs and the power behind BlackRock, they're not going to do that. Right? I can't see that happening. That would be like China banning Bitcoin, though. It would survive. So anyway, it's worth knowing that all the way out here as the minor, smallest possibility. But hey, we have to be aware of these things. And one of these days in M3 Active Trader, we're going to be touching on possibly trading Coinbase futures. If you're fully invested in crypto and Bitcoin and are worried about a big dip, you can trade futures on Bitcoin now. This is beyond the scope of this video. We might get into it in a future class in the M3 Active Trader, not to be degenerate leveraged futures traders, but more as for protection and insurance. All right. But I don't think we're there yet, you guys. This is a pullback. This market, more than likely, everything we've seen goes higher. So let's just keep going on the news, you guys. End of last year, U.S. Appeals Court finalized the mandate. So we know this, the Silk Road Bitcoin. So if they sold half of that Bitcoin, certainly, it would. Here's what it would do. The ETFs would start buying over the counter. They would probably do a deal to buy up the 2 billion. And BlackRock now has, if we go back to this, BlackRock has 8.68 billion, so they've sold a little bit, and Fidelity has 6 billion. So, this was 27 billion combined. I'm sorry, I'm in the wrong place here. Looking at assets under management. Forgive me. So it hasn't changed that much. They haven't been selling that much. And so when Grayscale started selling and dumping, the IBIT and Fidelity, everyone else were buying that up. And then when the selling slowed on Grayscale, these guys started buying on the open market and driving prices higher. If the government starts selling 2 billion in Bitcoin, it's really not that much in the scheme of things. And we have these other ETFs like ARK coming up. ARK is continuing to buy. They're almost at 3 billion. And so what'll happen is it'll slow the buying pressure, because instead of them buying on the open exchanges pushing prices higher, they'll be buying over the counter for a little while. Therefore, less demand for the exchange priced Bitcoin could drop the prices a little bit. So this is my read on it, and you guys can hold me to that, and we'll see if I'm right or wrong later. But let's see. I need another chart of Bitcoin here just so we can look at what I'm saying. And I was going to show this later. This thing, Core DAO, has just been on a tear. But as I said, someone said, should we buy it yesterday? I said no, because our new Bollinger Band Pro said this thing's overbought. It's going to sell off. Okay, so don't worry about that. We'll look at that tomorrow. Bitcoin down 4,200. Let me come back to that. Okay, never mind. What I wanted to share here, though, and back to that other chart, basically what we're seeing is sell order blocks appear. Lack of buying on the exchanges can push this down lower. This plays into our narrative, everybody, that we come down in the 60K region and then it goes higher. By then, let's say the 2 billion gets absorbed by the ETFs, and then they start buying back on the exchanges again. Does that make sense? Supply and demand. If there's less supply, then there's more demand, prices go up. If suddenly there's a lot of supply and less demand, prices go down. Keep in mind, everybody, too, that we should have a down month this month. We had 7 monthly candles up in a row. It's unheard of, never happened before. So to reset this, and dare I say, have a down month in April, even going into the halving, would be healthy. So we see a big buy block on a monthly time frame down in this sort of 50K to 60K region. I know some of you just fell out of your seat, but look, a healthy correction here. This was artificially pumped higher based on this ETFs. We had this nice trend channel that was forming. I like steady trend channels, but with the ETFs, it's like musical chairs. They were all rushing ahead to get in. And when we start getting above the now again, this Bollinger Band, this is part of our Crypto Mastery Pro indicators, where those vertical red lines indicate when it's above the modified Bollinger Band. We modify it for crypto. The out-of-the-box one does not work for crypto. It works good for stocks, but it certainly can head higher. But we want to pay attention to this because back in 2020 and 2021, those were early signals that we were getting ahead of ourselves. I'd rather see price inside of the upper Bollinger Band, and we use the third standard deviation instead of the second standard deviation. So this little pullback here, what I want you to remember is this is a good breather so that we can have that parabolic rise later in the year. Okay, so if you guys are hodling, and just stick to the plan. I don't, this is not financial advice, but this is the how to read these things. And I had drawn this a while ago. I'll revise this because clearly we did not dip that much down here. So new information equals new decision. We pushed up. So the next logical step is going to be down into this region. And, so sort of down in here, up to there. This is a bit janky here, so I'd have to redraw that. We just have to see how it goes, but a pullback back into the trend channel or even back to the top of the trend channel would make sense. So that's why you can see I'm at 60,000 there. That would be a respectable buy level to buy the dip there. And, keep in mind also we could have an alt season here if Bitcoin pulls back, because so much went into Bitcoin so fast that if people are, the whales are selling off Bitcoin, they could be starting to buy up altcoins here. We'll just have to keep an eye on this and see. So with that in mind, I know this visually is quite a lot. I want to pull up, let's go back to the weekly, and we do dive into these on a much deeper basis tomorrow. So I'm going to get back to the news here for a second. And then, and then we can show you guys a little more about the indicators, what we watch to give us the clues to where these markets are headed. So let's just see. 2020 DOJ seized and began seeking the official forfeiture of, let's see, I'm going to make this a little bigger here, of the coins. And let's see, there's a lot to unpack here. The official forfeiture of the crypto at the time valued over $1 billion, now valued at $2 billion. And again, they're looking to sell that. Could be spooking the markets. But again, that would be done over the counter. So let me just close that. There was another article there from what Michael Saylor has to say, and certainly he is a perma bull, and I'm sure he has bullish advice for us. Global asset printed red Tuesday. This is all good, guys. You can't have a tug of war with only one side. So it's the bear's turn to pull on the rope. And let's see, what did Michael Saylor say? Former CEO, he's still in control, don't worry. This is all for optics. Saylor wrote, bet on the future. Yeah, I mean, there's a short-term blip. And let's skim down, see if he has anything really relevant to say. He usually does. He's very outspoken. When saw second biggest outflow, crypto exchange Coinbase within a week. And however, the outflow raised speculation about institutional purchases. I don't know what this means. Raised speculation. The report mentioned that consecutive outflows totaled 33.8K Bitcoin, suggests huge activity within the institutional investor space. They want to buy, you guys. They want to buy cheaper. And, the markets and the market makers, they have ways of moving price. And the algos can be triggered to move price, and I won't go into that down the rabbit hole. But, if there's huge buy orders, if Larry Fink calls out and says, hey, I want to buy a whole bunch of this stuff down lower, these guys, the market makers want to make money. And certainly on the smaller scale that happens. It's harder to move the markets on a macro scale. But for sure, these guys want to buy lower. Data indicates a flush in Binance's open interest. So that could show retail investors who are usually wrong leaving their long positions. Well, we just saw 300 million of long liquidations here earlier today, the last 24 hours. And let's see, this is no longer about what Michael had to say. Sometimes that's clickbait, right? So This market downturn could have been exacerbated by a significant Bitcoin transfer to the Bitfinex exchange by a large hodler, indicating potential selling activity. And, I mean, there's a lot of coulda, shoulda, wouldas. Show me the charts. I'll tell you the news. We've been overbought for a while. We've already covered that, and so I have been taking profits and getting into altcoins, but not in been out of Bitcoin. So stocks tied. The performance also faced downward pressure. Coinbase, okay, et cetera, et cetera. Marathon Digital. That's the CEO I was talking about earlier, who was saying that. That we could see a 500. No, that was a different guy. What was he saying? I'll come back to that. I think we're going down a rabbit hole here. But look at this chart, you guys. This is kind of showing me we're bouncing. This is a big sell-off designed to scare out the weak hands, and we really just want to see, does this bounce here? Or continue higher. I like these trend channels. Now, if we do start to head lower, then this is the big question I have. Are we still in an upward trend channel, or do we start to form a new downward trend channel? And it would be healthy for us to do that. If we bounce here, here's what I might say. If you're worried, if we get a nice bounce here up into this, back to the 68 69K region, you might want to take some money off the table, because a buyback opportunity down in this region certainly would be good, as I've shown you guys, as a possible upside. And look, we see a lot of money just going into USDT. Tether, USDT dominance on the rise. We'll look at that tomorrow. And so no big surprises here, you guys. And so not to say it can't be scary when we see these big down days, but a lot of this is liquidating margin traders and flushing the liquidity out of the markets. So Bitcoin social volume. Let's see. I'm going to skim this. Major crowd buy calls. Crowd buy calls pouring in after Bitcoin's dip back down to 6. That's poorly worded, but it's basically saying the major crowd buying calls are pouring in after the Bitcoin dip back down to 66K. So, look, these degenerates, nothing wrong with that. Some of this is hedging. But a lot of these people are playing leverage, and it's starting to move over into the options markets, which is a safer play, because if you buy options on these derivatives, still kind of relatively low volume on the BITO and the BITI. Those are the options on the on Bitcoin, but they're safer because you're buying them either 30 days out, so that if there's a sudden spike in volatility or a spike in price, you're still in the position. And is in contrast to these perpetual futures, where you can be liquidated like that and then they resume trend. Ask me how I know. I was in a very large Bitcoin short in 2022 and was correct. I was short for 44K. They were short squeezing the markets, and they popped the price up as I was moving more funds in a blip, liquidated the position, and then resumed that on the way down. Would have been an excellent trade had it not been liquidated on that. And but that's how it works. So that's why I'm looking forward to trading more options on cryptos, you guys. If you don't know, I was a former founder of Options University, and we did a lot of crypto education options, rather, on the option markets on stocks. So derivatives properly used can be very profitable, and we might be getting into that a little bit later. We don't have anything on that about that yet. You can always keep tabs on what we're doing at moonstream.io. right here on this website. And we have a newsletter, by the way, where we do monthly picks. Mike just released the March pick, by the way, everybody. Possibly poor timing with this sell-off, but that's why we withheld it, just because we wanted to be safe. So if you haven't already looked at that, maybe it's a good time to pick up that coin. Crypto Mastery, those are the indicators we're talking about today. Moonstream Active Trader, that is this course over here, and we do weekly classes on Wednesdays, daily interaction in a Signal chat, so you have 24/7 access to me to ask questions. And I'll just pop over this next page. You can read all about that at moonstream.io/M3, right above me up here. And yeah, so basically this is our highest level active trading class. And we do have something where we also talk about sort of longer term holds in our Retire Rich courses. And also I've got a limited amount of one-on-one consulting. I have been getting a lot of interest in that lately. and I'm going to be closing that for a little bit soon. And then, of course, we had the Future of Crypto Summit. So if you'd have any interest in that or the recordings, this was excellent. And so basically, not here to sell you stuff, here to give you the tools to win. And that's what we have been doing for the last 3-4 years, actually since 2018 when Mike started Moonstream. And anyway, so let's get through these. We'll go back to the charts. Second phase of the crypto bull market about to start, says on-chain analyst. The on-chain analysts, they're not wrong, but their advice is not necessarily tradable. And I'm a much bigger fan of watching the charts. But this is interesting nonetheless to create that frame around what other people are saying. And I want to just move myself over here so you guys can see let's see, where do we want to be over here? I want to be over here for the other recording. So basically, on the headlines, second phase of the crypto bull market about to start. We're in phase 3. I don't know why this thing's phase second part of this, and we're certainly in the end of phase 2 rather. So let's see what they say. Crypto market transitioning from the enthusiastic bull to the euphoric bull. Okay, so he's using the phases a little different. From a charting standpoint, there's sort of blocks. There's phase 1. Phase 2 is built on top of phase 1. And then the breakout of phase 2, which is what we have been experiencing because of the ETFs, is the beginning of the parabolic rise. And so doesn't mean that we've hit the top, certainly, but keep that in mind. This guy's using a little bit different phraseology, terminology here. So not familiar with this person. On-chain metrics, I just, you guys, many of you know the story. I won't go into it, but leading on-chain metric analyst and editor of Bitcoin Magazine in a private whale session at Bitcoin 2022 did a whole half-hour long presentation. Actually, it was an hour, saying why Bitcoin would not go below 30,000. And because I'm a technical chartist and I had signs showing me that we do go lower, and asked him at the end of the session, hey, what do you think about if we go lower? He basically very condescendingly said, I don't think we do, and I just showed you why. And all the whales in the room were sort of smug and looked over at over my way, saying, yeah, be quiet, dummy. Well, one of us was right, and it wasn't him. So the on-chain metrics can be misleading. So what he's saying is about to transition into a second final phase. Based on what? I want to hear what he has to say on that. There's all these goofy, and not to put him down. There are some really smart analysts on chain like Willy Woo, and it's not tradable information. It's useful information, but I would be timing my investments with TA versus on-chain metrics. All right, so let's see. Exclusive interview with Cointelegraph. I would like to believe Cointelegraph is journalistically impartial, but I don't. 80% of media is placed, meaning somebody wants that story and storyline to go out, and sometimes is paid. Oftentimes is sponsored in some way, and sometimes for self-serving reasons. You guys heard my theory about when Cointelegraph broke the news that the ETFs had been approved prematurely and ran Bitcoin up quite a bit, and then they crashed back down once it was deemed to be an intern mistake. I did put it out there to Prior. I have to be careful what I say. Prior, somebody closely connected with the company and basically said, hey, wouldn't that have been a great opportunity for them to benefit financially by running the price up and then running it back down? And the person said, it would not surprise me one bit. So anyway, who knows? Who knows, you guys? We just have to be a little bit paranoid about everything in crypto. And I'll emphasize a little bit paranoid, as always. Paranoia has served me well over the years. So, all right, I'm going to move myself out of the way. Let's just see. Some comments here. Let me just move this over, and then I'll hop over into some of the comments here. So basically, some people are saying, so Perry says DOG's $2 billion, which we just talked about, is a grain of salt compared to the 1.2 trillion market cap for Bitcoin. Yeah, 0.2%. That's well put, Perry. And it's a lump in the road, a bump in the road. Really not that significant. I think more significant is the how people are going to react to this and get spooked. But again, that would be sold over the counter, not in the open markets. So let's see. This person said the price will rise until supply comes back onto the markets to satisfy it. Well, you know that that on-chain metrics didn't know that the DOJ's about to offer $2 billion in supply. This article was written 23 hours ago, so nothing against this guy. He didn't know, obviously, the DOJ was going to come out and add a lot of supply. That's why it's so hard to publicly make predictions and statements out there. So let's see, has the strongest bull market in history, one of, sure, that's fair, and the market seems to find support very quickly. I mean, that's really why I was fairly sure we would not pull back into that trend channel, and we would push strongly higher on that because of the ETF money, and that certainly was the case. So to find out more about what on-chain analysis, what my feelings are about this, don't bother. The next phase of the Bitcoin bull market, check out the full interview. Yeah, so this article, this person's trying to get some more. And here's the TLDR, you guys, on Cointelegraph's YouTube channel. And don't forget to subscribe. Okay, so this. This, you always have to sort of say, all right, but this article is really about getting eyeballs and engagement for whose benefit. Well, they're trying to get more subscribers on their YouTube channel, but so are we. No harm, no foul. By the way, if you are on the YouTube sort of a streamer, please please like and subscribe. Now, somewhere in here, I'm supposed to have a button that will pull up the chat if there is any live chat on YouTube, but I don't have that open. So I'm not sure how to even do that, you guys. So if you are watching on YouTube and have any comments, you can join these classes every week. By the way, if you go over to moonstream.io and go to the bottom, you can sign up and get some free information, get our free weekly newsletter here. You can sign up to be invited to these classes by email. So we have our own chat on Zoom, and also our trader success checklist. So we'll be getting to that in a moment and just touch on that. This is how we are utilizing the indicators that we have and other indicators for TA that, again, give us the edge in calling these markets, and they really do. I've been a 25-year trader and have used basically everything out there, and these are by far the best that I've used. So I'm going to download these on another screen for us. It looks just like this, and we'll go through some of it. If you guys have any coins you want me to look at with the checklist, we could do that. I'm going to download the version that is interactive, and where'd that go? I've got to do this. Once you download it, by the way, you just open it up like that. Okay, and so we can just drop this up in here. Maybe I'll do it like this so we can go back and forth. Let me come back to that. And okay, can't do it that way. So I want to get through the news. I know we kind of diverted a couple times. We have that we already covered. So 2 more articles, and then we can guide back into the charts, see some hot movers. That's how I picked up a hot mover yesterday, and I'll put that on your radar. So basically, all right. So I see there's a link here on the live stream. I'm not sure what that's going to do. I would probably need to be logged in there. And let me just see if there are any questions. I don't know if we're getting any lives. Let's see. I'm on my upper screen, by the way. I gotta mute that. And okay, yeah, I don't see anybody, but it looks good. Okay, cool. I'll just put that up top here. So if you guys do have any questions live on the live stream, we're just brand new at live streaming, so we'll see. We're gonna grow. We're gonna grow the people here. So let me just make sure I'm not covering anything important, and I'm not. So here's what drove Bitcoin's price down in hours. 440 million were liquidated. So we did cover that a bit. And that's the name of the game for the market makers. Okay, they have big buy orders. Larry Fink calls up the market maker. It's not like he doesn't really, but essentially, if they want to buy Bitcoin cheaper, and there's a lot of liquidity there, meaning there's a lot of leverage there to liquidate, to create liquidity. Do you understand? So if there are, if retail is heavy leverage long, because you have to remember, a lot of the traders out there don't have a lot of capital. There a lot of them overseas and trading high margin, 50 to 1, 100 to 1, and those are the people that get picked off because at the macro level, you've seen the buy blocks that we have in our charts, but the real-time versions of this, they're in a heat map. And this is essentially what if you imagine a heat map, they have various levels. But if there's a lot of levels down below in this region to liquidate because they went leverage long up here, right? They went leverage long up here at 50 to 1, 20 to 1, 100 to 1. Well, they just all got liquidated, driving price down lower. But guess who's buying down here, right? The market makers are filling orders down there, and that's the name of the game. So, that's probably more than you wanted to know for many of you. That just the point of that is this is the natural ebb and flow of the markets, and we're going to go higher soon enough. Okay, so let's see. During the same period, ETH, I want to just skim this for anything really important. And let's see. According to latest market update, speed of the move was driven by significant liquidations. That's what I just said. So when you come on to your computer and you see that this thing's just dumping quickly, don't panic. It doesn't mean anything is different about the underlying. It doesn't mean anything worse is bad about Ethereum or Bitcoin. It means that the velocity of the sell-off was caused by stop losses being hit, which basically often are filled at either limit or market orders, and then liquidations happen, which causes more stop losses. Boom, 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 and then sellers become exhausted. There are no more sellers. The buy orders start to bring price higher. The market maker algos are doing that, and there's probably a big buyer down in that level. Okay, just want to make sure you guys understand that, so you don't panic when these sell-offs happen. Okay, particularly on platforms such as Binance, known for their high retail presence, and also, I will add to that, margin. Binance US was basically hunted down by the SEC because they didn't want them trading, and we weren't really given the option for leverage on Binance US because the SEC, I would say correctly, the SEC isn't all bad, you guys. Leverage trading, very dangerous. And, there's two sides of the coin. The government, can't believe I'm going to say this, but they, the country needs money to run. And if we are getting targeted and blown out by these unscrupulous market makers overseas, because they don't give a shit about us, of course, and you blow out a couple $100,000 that was going to pay for your taxes, however, wherever you lean on that, but the reality is it's dangerous, and most of us should not be trading leverage. Okay, so, but point of this is, and I totally buggered the highlight there. I'm not sure why it's not letting me do that, but here, I'll just fix that. And particularly platforms such as Binance, are known for their high retail presence, but again, that these overseas high leverage platforms like BitGet and Bybit and KuCoin, which is just finally the SEC leaned on them heavy enough so that we're not allowed to access that anymore. And that's for, I'd say, for all of our benefit, unless you're really a professional trader. And if that's the case, then you already know you can get a Palau ID and get by KYC, and alleged so I hear, etc. Okay. Essentially, this caused perpetual funding rates to fall from a whopping 77% back to equilibrium. This correction nudged spot prices back within the 60 to 72K range. Okay, so that basically, all right, this is giving me trouble here today. Caused perpetual funding rates. So that is what happens on these deep sell-offs. Funding rate goes back to where it should be, and then the market can resume its normal course. So I think we're going a little bit too much detail for this class. We do talk about a little more detail, a little deeper on the M3 class. So again, you can find out more about that. Please go read about that at moonstream.io/M3. and get a hold of our trader success checklist. Also in the M3 class, we give you cheat sheets like candlestick patterns, high probability candlestick patterns, a DCA investing worksheet. This is something that I work with private clients on who have more capital in the markets to really optimize the bull run, a portfolio tracker, which is interactive, Great way for beginner traders to essentially put their trades in and manage when to take profits. And we're going to fix that in a minute. So we're add a new feature soon where it auto updates prices, and then high probability trading patterns, all in a membership area. But also you get access to our world-renowned trading indicators that are unbeatable. I don't care what you're using. Our trading indicators are the best I've ever seen. Certainly they work in conjunction with whatever you want to use, but if you're just using RSIs, and let me hop over to that other site. If you're just using RSI and the other indicators everyone else is using, then you are basically don't have an edge. So our crypto mastery indicators, which is what this class is designed to do every Tuesday, we look at the markets, look at the news, and I show you how we use the indicators to win in these markets. So if you just want these, you can get a free month on that. They're $97 a month. You can go down here. Again, I'm not here to sell you anything you don't need. I'm here to give you the tools to win in this market, and you can read pages of member reviews on this page and the page before of how much these indicators have helped them. All right, let's go back to our regularly scheduled programming. But anyway, that's what I want to share. And we're already bouncing. Bitcoin already bouncing. And I like that so far we're in a new upward trending channel. And if that's the case, then we can write off this spike higher as the ETF anomaly, right? Because when things get overextended like that, they often, if not always, revert to the mean. And if I put on our Bollinger Band indicator, then it's going to take a second. A lot of data we're pushing. Yeah, so essentially, when price gets above the upper Bollinger Band as we modify it, and I'll just move this over here a little bit so you guys can see. And essentially, yeah, so when prices get above the modified Bollinger Band, again, we use a third standard deviation Bollinger Band. This one, our Pro version, we've color-coded it. So when it turns red like that, it's an indication price will kind of take a breather or go sideways or sell back down. Because we're in a strong uptrend, sideways is warranted within the range. But really what I'm pointing out here is, and hopefully that's not too confusing, if I turn off the order block detector showing where the orders are, and we want to have a nice steady uptrend. This was, I think, the ETF anomaly. So this is correcting itself, but the true line is somewhere in the middle. Isn't the truth usually somewhere in the middle? So that's how I look at the markets as well. If you sort of average this push higher and this sell-off, I would say the middle point, the midline is right in this trend channel. So, we may not get below 65K, or we might come down to 60K. Either way, this whole level, this may be the last time Bitcoin is in the 60,000s. So, this would be a buy opportunity for some of you, and I would keep some powder dry for if we do drift lower. And just pulling up the EMA ribbon there. So as you can see, I do use other indicators still on the daily time frame. However, our average true range has flipped to bearish and exit mode, and we would obviously rather be in entry or buy zone. See down here, this is another one of the indicators in the bundle, in the Crypto Mastery bundle. This average true range gives you entry points when price action is changing. So here, this was a great trade. If we just jump back over to this trade, this location here back in February, and if you had just used that indicator to get in, Bitcoin up 60-70%. So we've gone into exit mode, but we're still in a bullish structure. So as we went sideways down here, I'm going to be watching closely for when we get another ATR entry. Okay, our other signals are our ERI Pro, our early reversal indicator, and then the trend strength indicator. So another reason why I'm not unhappy that we're heading lower, we want to see another cycle on this TSI. Our favorite buy points are when we come down into the green zone and go back to green. So red, 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 turn to green. This is our target signal above the 20 line. Where was that? Right down in here. Excellent buy opportunity, and then later confirmed on the average true range. It also works on all time frames like this weekly chart. And, so fortunately on the weekly, we are still in a buy or entry on the average true range. So it all leads towards a short-term pullback on the daily charts, maybe a week or two. Our early reversal indicator now shows money flow. So if we look at the weekly on this, look at this. So back here, January of 2023, okay, I was saying get back in the markets. One of the reasons was our monthly early reversal indicator went green, and we can clearly see it on the weekly too. We had money flow coming in. Now this is right after the depths of the market around 16,500. By the way, I did forecast 16.5 all the way back in here in May when we were chatting at the Bitcoin conference, and what's his face said we wouldn't go below 30. So he thought we wouldn't go below there. I predicted, I don't like that word, I forecasted 16.5 would be the low on May 19th. So back in here, I said we'll go to 16.5. People laughed, but we spent months down here. And then we had, by the way, and again, I'm here to share with you the tools that can really help you succeed. If I were to show you the monthly on this, let me turn off the ATR. And I'll turn off the Bollinger Bands, and I'm going to go to the monthly chart on our early reversal indicator. I need a little more data, so we'll go down to this chart. But look at this, you guys. If nothing else, let me hide all the drawings here. If nothing else, if you just had our early reversal indicator, or the ERI Pro, if even better with the order blocks, but you see there's only been 4 green arrows in history on Bitcoin. And one was down here at the depths of the market in 2012. And I'll just move this over here so you guys can see it. Down here, 2012, only 4 times in history. This one, and then it also caught the bottom here. All right. Back in 2015, we had an early reversal indicator. It looks simplistic, but there's a lot of math and quant work in this indicator. Also in 2019, before that bull started there. And then again, we had a bullish ERI right here on January of 2023 when everybody was saying get out of the markets, and that was the bottom. So if you had just bought there, you'd be up considerably. I think it's 175% at one point. Well, actually 340% on Bitcoin, or 3x, 16.5 to 72,000. Yeah. So how many of you like that? This is those are our 2 secret weapons. And the way that we use those, we know we're a little all over the place, but just in case you're new here, the way that we use these, if I go back to the monthly chart, and just on the monthly chart, and just the early reversal indicator, so the trade success checklist, where was that thing? Where did that thing go? Bear with me here. No, not that one. That's the chart. The checklist is here. I have too many windows open, you guys. I have to go find that. The trader success checklist, I believe, is this one. And let's see, we're done with the news. I'll leave that open. Here it is. Here it is. Okay, so basically the ERI, the early reversal indicator, was an accidental discovery that we made from another indicator. And so my programmer partner and I created this. It allowed us to call the bottom in the summer of July of 2021 to the day and to the week, and also call the market cycle top in December of 2021 into January of 2022 when I was saying get out of the markets. We were right there. And anyway, I'll show you this. But basically, if the ERI is green, this little green arrow, the oscillator is below it. You can turn that on and off. If you're a more advanced trader and don't trust little green arrows, totally get it. That's why we have the peek behind the curtain version of it, where you can see for yourself, and we explain what the oscillator does, but we show it as a green or red arrow. Fair enough? If the TSI is green, now these, by checking these off, gives you a trade success score, as you can see down below. So now my trader success score, I might be covering it, so let me move this out of the way. So over there is the trade success score down at the bottom, 2 out of 21. And as our other indicators start to align, you can check those off. Our signal line, if that goes from red to green. So the point is, the higher the trade success score, the more probability that your trade will win And again, you can find these indicators at cryptomastery.org. Let's hop back over to the chart and I'll just show you in real time what this looks like. But so just on the arrows though, and the TSI, so the way these work specifically, green arrow to confirm, we want the TSI, the trend strength indicator, come out of the green zone and above 20. So this little green chevron, that's the confirmation. That's it. Those two themselves are so powerful. And similarly, on the bearish side, if we were to see a red one like this, we also want to see it confirmed by going down below the red zone, below 80. So that's essentially it. And then if we add in our other indicator, I'm on a different chart here. I have, let me come back to that. All right, so that's basically the ERI. And if we were to check out some other indicators, again, if you'd like to have your standard ones, RSIs and MACDs and all of those things, you can. But I just find it to be a lot of noise, and I don't need them. So I'm not going to look at those. We'll do look at those tomorrow. Really, you don't need those. So basically, on a different chart here, that's that study. And let me go back to this one where I do have all the indicators. Great. So, so right now, it's not a good thing or a bad thing. It's just a thing. I'm going to move my, let's see, where do we want to be on this thing? I'll just move us over here. So over to my left, what do we have? We had a bearish ERI here, early reversal indicator. Also, our order blocks were showing sell pressure all the way through here. No surprise the sell-off has happened and that we have strong order blocks down below. But what I'm looking at is ERI here and a bearish TSI breaking below 20. We do have more downside, I believe you guys. We're gonna come down in this region. I think we come down into 60K. I do, and the reasons are all of our indicators are going red. It's not a bad thing. It's a reset because our best opportunities to get in are over when we start to see these little crossovers on the signal line going from red to green, red to green. So if we come down a bit down here and then we go back green, that's going to be great. Great time to re-enter. And also our fourth indicator that we look at for the most part is the trend indicator. So as you guys can see here that we have several signals in here. Basically, when it goes from red to green, our signals are key is a trend change is coming, and a bell is what we're looking for as a buy. A bell is the buy. So our mantra is ERI, TSI, signal, and bell. And when you start to get those aligned, I'll come back to that. I'll show you that in a minute. But the bell is the buy signal. So it's kind of like Mario Brothers running out, grabbing all the coins, and the bag of money is your sell signal. And wait for a new bell, and we can see we had multiple cycles of key bells into profits. Okay, and the little green one is also a partial take profit there. So again, our four primary signals are the ERI, the TSI, the signal, and if we're going higher is the bell. Everyone got it? And then you can layer in some of the other indicators like the average true range, which can also be used as a stop loss. Got to add that in here. For some reason, it's not on there. ATR. Dynamic ATR. So these are our custom scripts that you'll turn on in your trading view once you join and we get your trading view ID. We turn those on manually for you. But again, on this weekly time frame, the ATR shows we're still bullish. So we'll keep an eye on that for sure. The Pro Pack, I won't go into too much detail, but that has some really interesting new signals there. One of which I will share with you, and if you'd like more information about the Pro Pack, we are releasing that on a limited basis and have a number of these indicators. The RSI Pro, let me just show this to you guys. I'll turn these other ones off. They're all good. The whole point of the Trade Success Checklist, by the way, is not to confuse you. It's to show you when you have more things checked here, it's a higher probability that it's going higher. So is the trend indicator showing a bell, which is what I just showed you. So you can use this as a checklist and a cheat sheet to basically say my trade success score is over 6, over 5. Typically it doesn't need to get higher than that. But is there a bullish engulfing candle pattern? So I've got regular signals in here. You can download this for free at moonstream.io right at the bottom. And then you also have other things in here. We have something called a rocket, by the way, which is one of our favorite indicators that this pattern, when we see it, is highly likely to shoot up in the sky for a short-term win. And essentially, it explains this in the checklist. I don't want to spend too much time on that because we're coming up on 90 minutes, and we'll try to keep these classes a little bit shorter. So anyway, the trade success checklist, excellent. We also have a multi-time frame radar, you guys. This is designed to show that is it time to get in the markets or stay out of the markets. And so this, if it's all red, I would say get out, but we're bullish on the 4-hour. We've retraced. This morning it was all red. Okay. And so if I turn off the dynamic ATR, and by the way, guys, this is a training class every Tuesday. If you do buy the indicators, we're here doing these classes to show you how to use these. And so basically, bearish engulfing candle, I think we come back down to the 60K range. Like I said, the radar is mixed, and you can edit the time frames on these, by the way. I like to go a little wider on the time frame, so I probably shouldn't do this because I think it's going to be red all the way through and might be a sell signal. But we should always be aware of our own confirmation bias, right? So that if we are wrong, we don't want to have our head in the sands thinking that we're, looking for the nail if all we have is the hammer. So I've just done it to daily, weekly, monthly, quarterly. Well, good news, quarterly, we're still green on the radar. I was a little nervous that if that was all red, that is a sell signal for the entire market, and I don't want to see that quarterly go red. Okay, so that's another one of the things that's included in this package here for Crypto Mastery. All these tools that really help you see what others don't see, and pages of user reviews, so you can check that out, and also the indicators that are included there. Like I just talked about, the early reversal indicator, hence the name. Excellent for catching market turns earlier than others. It also works on all time frames, by the way. I thought I had my 1-hour, 4-hour chart up. I can do that if you guys want to see that. We might want to look at that for some clues. But just to finish that thought here, the signal line, the crypto trend, the trend indicator, volatility index, I didn't get into that. That's one great for showing directional reversals on 1-hour, 4-hour. The dynamic ATR, the multi-time frame radar. So this is all explained on this website at cryptomastery.org. But imagine capturing these big reversal points like you can see here on these charts and avoiding these 50% drops. So again, if we see the early reversal indicator and our TSI go red and a bearish engulfing candle on a weekly, we're about to have a significant correction. We are not seeing that currently. If we do, I'm not going to second guess. I'm going to exit the market at least half of my positions. That's just me, but that's proven to be a winning play so that we can buy back lower when we see the opposite, the green ERI and then the green TSI and possibly a bullish engulfing. But typically that ERI TSI is so good, you guys. You need to have it. So check that out. All right, what I wanted to do here, I think I've covered the Trader Success Checklist. You can get that at our website. Do you guys want to see anything else? Blocking the radar. Yeah, it's hard to be in the right place, you guys. Thank you, Perry. And, oh, I know what you mean, over on Bitcoin. Yeah, it's hard to do these live streams, you guys. So anyway, let me get back to what we were talking about. And anything you guys want to see, and what haven't we covered? So I'm bouncing around a little bit here, but we are, again, on the TSI, probably heading lower for at least a couple more days into the weekend. I'd like to see Bitcoin down in this range, right, and then come back above. That will be the buy the dip signal. Mark my words. The weekly time frame, a little bit overbought, but I'm more looking at the daily at this point. And as you can see, I've got buy on pullbacks right in here. You guys can follow this as your roadmap. It's not going to match exactly, but it's pretty close. We're seeing this dip. We saw it push up, calming down. But once we break significantly up above 75K, that's that number where we're going to push much higher and head up to 100K, I believe. Have a little bit of a hiccup at 100K, and then up to 155K, possibly a deeper correction. in going into the summer, which we've seen in the past. May potentially is a down month, and then June, this could be June as a down month. We saw that in July of 2021. We had a big correction. So be ready for these 30% corrections in these bull markets, because they do happen on the way up. And ideally, you want to have some powder dry to buy on those pullbacks. So anyway, you guys, let's see. I have a question. How do you get your Bollinger Bands Pro to appear on the action chart? Okay, yeah. So if you are, thank you, Perry, if you are one of the buyers of the Bollinger Band Pro indicator, once you are able to do that, and by the way, if you want more information about it, you can buy them. I don't even have a video on those yet. It's moonstream.io/masterypro. I can't emphasize enough how good these are, and there's a lifetime offer there that you guys can get. I'll just drop it in the chat. But let me get to your question first, and you guys can check that out in a minute. What that looks like. So inside the indicators, again, we turn these on once you subscribe. There's a lifetime offer for $1,500 for the Mastery Pro indicators. Highly recommend you get that. And the Bollinger Bands. Okay, so let me show you these. Many of these you can drag onto the charts. So I'll put the trend and the Bollinger Band on. So turning off the other ones, all you do, Perry, is you click and drag this. So you click it once so you see the little circles. Let me go full screen for you and move this out of the way so I'm not blocking anything. Wait, I'm all the way over here. That's cool. Click and drag it onto the other chart. So as you drag it up, you see it move onto the top chart. Okay, very important though, you want to go over to the left side, and in the numbers, you want to right click and go down to merge all scales into one on the right. And I'll tell you why. Because if you don't, and you start moving the chart around, it only moves the chart and it doesn't move the indicator. Obviously that doesn't work. See that? So if you go over, right click, merge all scales on the right, now they are in tune together. And I'm going to move myself back over here, because right above me you can see that they are there. Now what I would suggest also on the Bollinger Band, right click. If you're using EMAs, we recommend the 21 and 50 day EMAs. So if I turn off, the 21 is similar to the basis of the Bollinger Band. See that green orange one? So what I like to do is on the Bollinger Bands, come in here into your the inputs and the style, and uncheck the basis line here. Do you guys see that? So right next to me, I just uncheck that blue line, and you can also save that as default if you want to do that. I'm going to do that for mine because, again, I always have the or electric Bollinger. Why do I have this on here twice? Sorry, open this up. You can do default, save as default down below. Okay, and then what I like to do is I like to have the 21-day EMA and the 50 period EMA, not just the daily. I like to have the weekly, all-time periods. 21 and 50, those are the best EMAs, in my opinion. Okay, and so there you go. We have Bollinger Bands tightening on the main chart. If you want to also drag the trend indicator, see, I just clicked and dragged that up, and I'm going to drop it like it's hot right there. For the moment, I'll turn off the Bollinger Bands, because those are excellent for areas to sell or buy, but I'll turn those off. Now, same thing, I'll go over and right click on the right side and merge all scales into one on the right. So now, potentially what you can see, the vertical green lines are your bell or buy signals, just to make it easier to see. Okay, so here we've got the key and the bell as the buy signal. Boom, 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 take profits, wait for a new key bell here. And then shot up to, now this one sort of fizzled out, and then we had a new key and bell. So, look, these are meant to be used together, not all by themselves, right? Typically, we're using the trend indicator once we have a green ERI, TSI, and signal, and then the bell, we call it the four kings, because when those all align, magic can happen. The only other thing I haven't shown you guys, if you're new here, is the rocket, and that's part of our Pro Pack as well. So the rocket indicator is amazing for catching short-term pushes higher in price, And let's see if I have a good one here on the daily or the weekly. This was a pattern I've noticed for years, but just never was able to program it. Now we have it. Okay, so here is a textbook rocket here, and it's all described in the trade success checklist, wherever that was. It's on one of these pages. Never mind. I'll pull it back. So the rocket indicator here, down here is one, and then this is a good one here. Rocket is ideally. Let me turn off the ERI Pro here for a second. Basically sitting on a launch pad, the 21 period moving average closes near the top, and the wick down below, it's like lighting a bottle rocket shooting way up into the sky, right? So there's one here, shot up here, ran out of rocket fuel, came back down to earth, and those are good ones. We see them a lot in the altcoins as well. And so I'll turn that off. That's part of the Mastery Pro indicators. And by the way, if it's intimidating and you're new to all these, it is learnable. And we cover that in more detail. Use them every week in the Moonstream M3 Active Trader, which you can sign up for monthly and also quarterly. And we've got some great insights in that class. So that'll be tomorrow's class. And then we do our Retire Rich class on Thursdays. So that's all we have time for this week, everybody. I want to thank you guys for being here. And there are links up above. I don't see anybody in the live chat on the YouTube, but if you are watching, please do go ahead and like the video and hit subscribe. Turn on the bell so that you know we are going to be unpacking this every Tuesday. And so at any rate, don't worry, everybody. Thanks for you guys that are here live. And if you want to join live here with us, you can go over to the website and sign up for on moonstream.io down at the bottom. If you don't want to watch on YouTube, you can join in and ask your questions live on the Zoom call here. And so we welcome you to do that. So thanks, everybody. And yeah, so cool. I think we did a good job on this. And so as far as, the markets here, don't panic. Hopefully, at least you understand now why the sell-off is happening, what causes it, and why the buyers will probably start coming back in soon. The big wild card is if the government starts dumping on the OTC market, it may just pause the buying pressure for on the exchange Bitcoin. Okay, so again, we'll unpack this a little deeper tomorrow and keep an eye on things. But, there'll be some good buy the dip opportunities here. I do think we go higher as we talked about. So, yeah, Perry says 10% market in the drop of the market. It's just a sneeze. And, I will say this. People say you can't time the market. Well, we are certainly trying. And let's see. Some news just dropped. Let me show you the order block detector, though. Because why is that not loading for some reason? Maybe because I'm on the weekly. Yeah, so the daily time frame, this wasn't a surprise. We have these order blocks here. This is part of our Pro Pack, the order block indicator, showing lots of sell orders up in this range. And we still get it wrong sometimes. We don't want to believe it. We think we're going higher, and just this is like a weather balloon up in the clouds, and so there's no surprise it came down. That's why I think we come down to 60K into this green zone. And as I showed in my other chart, this would be what I expect, something like this, where we dip right into that buy zone, all those frothy buyers, and then we shoot up. We break above the 75K high, and it's onward and upward. Okay. Cool, everyone. Well, thanks again. Hope to see you in M3 Active Trader tomorrow. Or if you'd like more information about our Retire Rich class, you can learn more about that on the website. You have to send us an email. That's by invite only. And if you do want some private help with me and work one-on-one with me, you can learn more about that at moonstream.io as well. And there's a link you can go watch a video. A number of you I'm already working with there. So moonstream.io. I just want to give everybody a lifeline if you need one. I'm busy as enough, you guys. I'm fighting for every minute. I'm not trying to push you in any direction, but there's a button down here for coaching and mentoring, and I can do some private work with you guys, as well as if you want to improve your skills one-on-one, or want my help to help build a optimal portfolio for or with you guys. So there's a link for that and a little cool video with a rocket on it. So there you go. Take care, everyone. We'll see you next week. Bye.